All right. What's good, y'all? So, today we are going to be I almost said smoking. We're going to be speaking about mostly Aurora cannabis. Aurora cannabis has been hovering at $1.90 like all day. It cannot break 190. My chart reading and my lines, they're telling me that, 90 cents, $1.90 is that really common point where you're most likely going to get your buy order filled. Now it can go as low as, I'd say, 180 worst case scenario. I don't think it's going to go there because today, you see this MACD right here? It's just consolidating. It's so close together. You guys can see that it's basically on top of each other. Now, I just see that as, a month ago where it was consolidating here. And after that happens, it's going to gap up. There's a lot going on this 4-hour chart. Look at this. It can't break the line. But I have a freaking good feeling, it's not financial advice, strictly my opinion, that it had to retract. It had to go back to the line, the zero line. When you have this much pressure and it's just below the line, the breakout is immense. All right, so once it pulls back a little bit, it has to test it. That's just the way I feel. Let's say a stock goes to $5.50. It's gonna bounce back to $5 more than likely. That's where the buying pressure comes back at $5. It becomes attractive to people. So the price actually has to go lower. The volume has to go lower. Remember in the last video, the inverse head and shoulder, that volume breakout is what we need. Now, how do we get the volume? A good price and fundamental news. So any day now, I have a feeling Nelson Peltz is going to announce something. He's the second largest investor and he has advisor powers over Aurora. And let me tell you, Nelson Peltz, he's not just some average fellow. All right. We got the Wikipedia pulled up. This guy is 77 years old. And you know what I really liked about this? He has been in business since he was 21 years old. His dad actually gave him rights of a food distribution business that his grandfather started in 1896. They eventually moved to strictly frozen foods, and by the time he was 30 in 1972, they had acquired multiple different businesses, and they created a company called Flagstaff, producing 150 million. That's incredible for a 30-year-old. But eventually, it went bankrupt. So everything I'm reading right here is a good thing. He's been in business for so long, 52 years. He has acquired businesses. He knows how to make revenue, and he has suffered a significant loss, bankruptcy. I don't think he's going to make that mistake again. And he did that when he was 30, okay? Now, what happens after a huge failure? He acquires Snapple from Quaker Oats and brings it back. It's a Harvard Business School case study. And he goes on to invest in huge companies like Heinz, DuPont, PepsiCo, Mondelez. If you guys don't know that, you guys eating Chips Ahoy or Nabisco or Oreos? Yeah, this guy, I want him to be one of the jockeys running this show. So I'm extremely confident. I have no fear in this. Just to remind you guys, this is a really good perspective. Nelson Peltz, this is the 5-year chart. He got on in March. He became a big investor in March. The gap up happened right over here, guys. Guess what? $10 a share. I think I'm getting a pretty freaking good deal at $1.90. You guys should not be afraid. You know, it might go to $1, you know, but that doesn't mean go all in right now. I mean, that's just the nature of the thing. You know, if it goes down, you gotta double down. You ever play blackjack? Sometimes you gotta go heavy. And a lot of times it just happens like that because the stock keeps going down. Now, if this cracks downward, it's definitely not going to be good. I mean, I see it as a buying opportunity. It could test these MACDs again, the mean, I would say. But the RSI is pretty good. I think it's ready for the next leg up. I mean, you know, it's obviously a bullish trend for the RSI. And this is bullish to me too. Another attempt at the line for the MACD with the crossover about to bounce back up. I don't know, guys. It's looking pretty good to me. And, you know, yesterday I made the video on ACB. It's not like it was going to pop today. I honestly think, I don't even mess with options anymore. I honestly think, and I haven't looked yet, I honestly think there are options that they're trying to expire by Friday, tomorrow. So more than likely it's going to gap up Monday, and we might get some news first thing Monday, because I'm sure Nelson Peltz wants this to run all week. There's definitely going to be a dip and rip on Monday. But I also watch CGC heavily. So the thing about CGC is I called the inverse head and shoulder already on CGC. That's how quick CGC is compared to Aurora, because I have a theory that they're lagging. Yeah, just ignore these lines. I drew them like a long time ago. Definitely didn't check this before the video, but look at this. You don't have to be an expert to see the inverse head and shoulder. There's the left one, there's the head, there's the other shoulder, gap up. Made $12,000 there. And I didn't get greedy because I put it in something else. I was like, well, you know what? They shouldn't have flopped their beverage release. That was like, I would have held until 30 to 40. But when I heard that shit, I actually held it for 2 days. And I was like, wait a second. This is not good. I sold it at about 25 to 24.50. And then it tanks 10%, which I'm happy about. But the MACD shows that it's about to gap up again, next leg. So I don't think Canopy is a bad investment. This is definitely a buying opportunity right now at $23. It could go a little lower. You know, it could do a little double bottom action right here at $22. But that's if you're conservative or looking to increase your margin. But you know, I don't mind getting in right now if I think it's going to go to 28, which I think it really will. Inverse head and shoulders already occurred on Canopy. This is why I'm so confident on ACB. They have a lot of downward pressure from the shorts, and it's giving us an opportunity. The banks have this on hard watch, y'all. The next thing you know, you're gonna get a huge spike because the banks are buying. No one's gonna tell you, but that's what's happening. That's the only way all those shares are being bought up. Not financial advice, just my opinion. Tesla, looking good. Just riding the Bollinger Bands. It's breaking out a little bit. As you can see, every time it breaks out on the Bollinger Band, it goes back to the moving average. So prepare for a drop, but obviously it runs in a channel But as long as it stays above the mean of the Bollinger Bands and the moving average, it's good to go. Because, like I said, this thing's going straight to 800. Like, you draw a line from that, yeah, like it's going. Yeah, as you can see, this is the 1 year chart, and RSI is looking kind of, it's running a little hot. It's getting to that top. So my thoughts are that it's going to keep running. Just because it's going to recent highs of the RSI doesn't mean it can't keep running, because this is a parabolic breakout. Like I said, this was the first gap up, but I consider that everything from 200 to 400 consolidation. You see that? You don't get any movement like this in the past. This is just a good sign that, you know, it's just gonna keep running. $1,000, that's what they say, right? AMD, I've been trolling the stock twits board on this, but because I really think it's going to tank 50%, I actually took a loss like that. It was at 32. I was so balling. I was like, oh shit, 50% drop. 1685. I'm not playing, y'all. This has the potential to do that type of stuff. This is the lose your shirt type of price action. What happens when it crosses over these lines over here? It's not complicated, y'all. It looks like it's about to ride the bottom of the Bollinger Bands all the way down. When it touches it right there, it just, boom, sharp drop. So that's what I'm betting on. I didn't buy any puts or nothing, but when the MACD, look at that velocity of the MACD, it just does not look good. And I wouldn't buy this, it's way too expensive. If it goes to $60, like, whoop-de-doo, you made 20%. But, boom, you might lose 50%. It's just like the what do you call it? The, yeah, you know what I'm talking about. The benefit to risk, yeah, return risk ratio. Anyways, guys, hope you enjoyed this video. You know, Aurora, you know, I'm calling stuff right now. I'm not a fortune teller, but highly likely Aurora is one of the, you know, kind of like the last to get big deals. They got that UFC deal, but, you know, they don't have the David Klein CEO like Canopy does. They got Nelson Peltz, but they don't got that fire CEO. And I really feel like some news is gonna drop soon. It's just, you know, it's all a matter of time. Like when I was investing in CGC, when I made the 12,000, it was looking rocky right here, okay? But I was buying it up. Out of nowhere, you get news. It's just, that's just how the game works. If you wait after the news, you're gonna buy right here. And then it's gonna go up. And then it's gonna go down. And you're break even. Or you might even take a loss and get scared and cut it short. But it's about to gap up. So, you know, best strategy, just buy as low as possible. If you miss the run, okay, you missed it. But if you chase, it's like you got that, that's the risk you take. Like, I mean, obviously if it's gonna gap to 40 or 30 or 28, like I think, you can buy after the, you know, after the rally, but I like playing it beforehand. I like buying it when the MACD is right over here, okay? Because I know this is gonna happen. Because I called the inverse head and shoulders. It's just, you gotta play these obvious ones or else you're gonna leave money on the table. Thanks for liking the video, guys. Comment, I wanna hear what y'all think. You can bash me if you want as well. I will see you guys next video. Peace.